Welcome back to the Daily Debrief. Wall Street just feasted on yet another blockbuster tech bounce today, all while Fed rate cut odds hit 80% and Trumpsy peace vibes thawed global jitters. Small caps stole the show today with IWM's plus 2.18% surge, but that retail sales miss has Grok Trade wondering if the consumer party's winding down amid the holiday rush. You're tuned into the Stock Market Summary series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it.
It really was a convincing push, just building directly on yesterday's green candle.
A strong confirmation.
A very strong confirmation. I mean, you look at the indices, SPY was up almost a full percent, DIA up 1.45, QQQ up 0.62.
And those small caps, they were really the story.
Oh, they were roaring. IWM at plus 2.18%. The big thing is SPY, DIA, IWM, they all clawed their way back above their 50 and 20-day moving averages.
So that's a key technical sign for you, right? That the rebound has legs.
It has serious legs, yeah. And it wasn't just the indices. The macro signals were all pointing the same way.
You mean volatility?
Exactly. The VIX just cratered, plummeted way below 20. And at the same time, the U.S. dollar took a noticeable nosedive.
Which is exactly what equities want to see, that negative correlation.
It's a powerful tailwind for a risk-on move.
Okay, let's zoom in a bit on some sectors. Also, we saw your comment about Apple's potential triple top. Well, I guess we got our answer today. It pretty much negated that. What other stocks are you watching? Let us know, and we might mention it or break it down on our next episode.
Yeah, that Apple move was something. But today, the moves in financials and healthcare were really key.
XLF and XLV.
Right. So financials XLF recovered dramatically. It snapped right back into the apex of that daily chart triangle we've been watching.
Just getting squeezed.
It's getting really squeezed. And when it recovers back into a pattern like that, if it rips higher from here, it sets up this powerful move we call a bullish death hook.
A bullish death hook? Sounds intense. It's basically telling you a big decision is coming.
A very big decision.
Yeah.
And then you have healthcare XLV, which didn't wait. It just provided the breakout immediately.
From that high base formation we talked about last week.
That's the one. A classic rip higher. Buyers just consolidated and then launched the next leg up. And even utilities, XLU, it dipped, but it's holding.
Still above that support trend line.
Importantly, yes. It's holding that line.
And that's such a key part of trading, isn't it? Knowing the difference between a dip you can buy and a real breakdown, it's all risk management.
It is. Sticking to those ironclad risk rules, knowing your stop loss no matter what the hype says, that's what lets you play these patterns correctly. It's something we break down in a lot of detail in the Grok Trade Mentorship, how to find those odds-based entries.
Let's shift over to the economy for a sec. It felt like a bit of a mixed picture today.
It was. The inflation data was fine. PPI for September came in at plus 0.3%. Right on consensus.
So no surprises there. But the consumer...
Yeah, the consumer data is what's raising a flag. Retail sales, it only rose 0.2%.
Missing the 0.4 forecast.
Yes, and it's a huge slowdown from August's number, so it kind of hints that shopper fatigue might be setting in. Sticky prices are starting to bite.
Which keeps that Fed rate cut talk interesting.
It tempers it a bit, but yeah, it's still the dominant conversation.
And what about the risk-off assets? Bitcoin, metals...
Well, Bitcoin gave back some of yesterday's bounce. It dipped about 1.26%. Metals, meanwhile, GLD and SLV, pretty much flat, just holding inside those symmetrical triangles.
As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later.
And, for anyone who is serious about translating all this data into a real trading edge, setups like XLF's triangle recovery, XLV's breakout, XLU holding support, these are the core of what we teach. Our mentorship program is intensely focused on homing those pattern hunts, building odds-based entry models, and instilling those ironclad risk rules that, help traders compound wins.
Okay, so wrapping it up, the key takeaway today seems to be that the technical rebound is real. It's digging in, but
that retail sales miss is a little whisper of caution, a question mark over how much fuel the consumer really has left for the holiday season. Which leaves you with a question to think about. What's your read on that powerful breakout in XLV, in healthcare? Is it just a safe haven in a choppy market, or is the first sign of a much broader sector rotation?
Something for you to chew on tonight. Have a great rest of the day, and we'll catch you in tomorrow's market summary.